Well, I hope everyone has a moment to stand up and stretch their legs. We are at our midpoint, and I hope everyone has an opportunity to get some wonderful Miami coffee and welcome our next panel. Our next panel deals with some of the most interesting issues covering asset management and custody. So important, especially now. So, without further ado, please give a warm welcome to our next moderator, CTH's own Kevin Liu.
Excellent. Well, thank you very much for the warm welcome. So good to see all of you here, alongside also our esteemed panelists today. We're here to talk about asset management and custody. No doubt, probably some of the hottest topics on the word on the street at the moment. And I know you guys probably have a lot of many burning questions and topics in mind. But I'm going to actually hand it over to our panelists very quickly. But I'm Kevin Liu. I'm the Managing Director of IDEG. We are the asset management of the CTH group, and we're very graciously happy to host all of you here at our event for the next sort of 2 days. So on asset management and custody, we have Nate from Cross River, we have Betty from Copper, and we have Joel from Ledger. Some of the most recognized companies in the custody business. And we're going to hear from them today about what they think about the current situation, where we're going, a couple of the standards that their institutions are looking at. And yeah, we'll take it from there. So perhaps maybe a quick introduction. We'll hand it off to you, Nate, and we'll go down to Betty and then Joel.
Sure. Thanks, Kevin. Good afternoon, everyone. I promise we're going to keep this very, very exciting. My name is Nathan Bekerman. I head up partnerships and custody at Cross River Bank. Cross River Bank is a fintech infrastructure bank, so we provide payments as a service, banking as a service, and lending as a service, all via API in a white label system.
Thank you. I'm Betty Sharples. I'm Business Development Director for Copper. We are founded on custody with the goal of bringing prime brokerage services to the crypto space.
Hi, I'm Joel Edgerton. I work with Ledger. So Ledger is famous for our retail wallets, but we also have an enterprise solution that we sell to custodians, to exchanges, and to corporates. Just one really quick question. How many people here have a Ledger Nano? That's a pretty good representation. That's a pretty good representation. You can always buy more. We're happy to let you buy more. But yeah, that's great. Great.
Right. Thanks very much. And just probably also worth mentioning that you have a lot of institutional knowledge and background up on the stage here. So perhaps maybe, Nate, let's start with you. Like with respect to Cross River, right? You guys are an FDIC licensed bank. You guys have been sort of banking Coinbase for some time. How do you currently see the markets and the demand for your guys' kind of services, who's obviously a trusted, reputable organization?
Yeah, so as I mentioned earlier, fintech companies are our primary customer segment, and we are seeing a growing trend. I mean, most of the people in the audience are customers in one way or another of a fintech, and so the growth of Web 2, what we're calling now, and maybe you've heard it before, is Web 2.5, which is essentially fintech in the front and DeFi in the back. And so we're big proponents of blockchain technology and what crypto can bring to the world and to the ecosystem. But we also believe in a regulated infrastructure. And so Cross River has been, for the last 2 years or so, been building infrastructure to allow our fintech customers and our builders to use our rails in order to build on top of. And so most of our customers say, you know what, I don't really want to be the custodian, but I want to offer my users the benefit of being able to trade crypto, being able to hold crypto, being able to use the benefits of NFTs. So Cross River builds the rails, and we think that a bank has a very interesting place in the crypto ecosystem.
Thank you. And then, Betty, what about yourself? You guys have got like a strategic partnership up with State Street, another institutional name in the banking side. You know, what moved the needle for you guys to be able to work with them?
So yeah, it was actually, we made the announcement about, I think at the top of this year, that State Street is going to license our custody technology. They did, you know, if you will, a bake-off between ourselves and other competitors as well to see which was going to be the best option. And, you know, and we won. So it speaks for our technology and our ability to provide safe and secure custody.
Great. And I guess, Joel, very quickly, something we were sort of chatting about in the back, right, is that we've seen the ebb, the flow of the market. You guys have a couple of verticals, whether it be sort of corporates, exchanges, maybe even funds in certain cases. Yet you don't seem to see any upset in demand. Demand's still strong for some of those corporates, right?
Ledger's doing great, man. This is a great time to be working with Ledger. Yeah, so we have obviously our retail product, but on the enterprise side, custodians, banks, exchanges, as I mentioned before, and corporates are also just booming for us. We have a lot of companies that are recognizing the benefit of better understanding their customers, and they see, you know, wallets as a new customer. Just like you have digital marketing, advertising, and the targeted advertising, a wallet is another way to target a customer. And you can see what are the assets that they have. You can see what their behaviors are with that. So it opens up a lot of new ways to create relationships with individual customers. So they're coming to us and they're saying, okay, we got this great idea for marketing, and we're going to do NFTs, and we're going to do token gating and all this kind of stuff, but our lawyers hate us, and our tech guys hate us, and our accountants hate us. Solve our problems. And then we come in, we'll solve those problems for them.
So I guess maybe this is just really an open question. You know, like perhaps maybe Nate, we start with you. You're a bank, right? I mean, how much of this are you building in-house? You mentioned you're like that guy who's writing the procedures and sort of doing the work. But you know, how much are you building in-house versus actually then partnering up with other companies, crypto natives potentially?
Yeah, writing procedures is a lot of fun, but it must be done. And so we leverage best-in-class technology where we can, and we try to build what we know how to build first. And so in the world of custody, there's kind of a few players out there, clearly, that know what they're doing. And so you really have to be built on top of the right infrastructure. And then one thing is to be a custodian, and another thing is to be a custody technology, right? And a lot of people confuse the two. And the difference is who is actually holding the key, who has control to your key. Now, our thesis at Cross River is that the future of users in crypto is not going to be everyone holding their own key, right? And so, because it's very risky. If you lose your key, you lose your crypto. So you want to trust someone that you're willing to trust. Who have you trusted in the past? For hundreds and hundreds of years, banks have been trusted institutions. Yeah, banks have done some things that are, you know, not as trustworthy as others, but those banks haven't made it. And so if you're going to trust a bank to hold your keys, you can actually use a software provider like Hopper, like Ledger, an enterprise software provider, that will help the bank hold the keys.
Thank you. And Betty, what about your perspective, right? Do you see your clients that want to build internally versus work with you guys to outsource?
You know, I mean, I think that we all know that crypto moves so fast, right? So the idea of being able to build everything yourself is kind of, it's just not possible, you know? So I think, you know, you want to play, as Nathan was saying, you want to play to your skill sets, absolutely, but, you know, cover ourselves where it's like, if we want to be able to provide our customers with the services that they require and demand, we can't do this on our own. Like we will have to explore other partnerships. We have to look at other things because otherwise, you know, we'll be 5 years down the road and that window's gone.
Yeah, and one of your perhaps maybe more innovative products, because I've been aware of you guys in copper for quite some time. You're incorporated in the UK, Switzerland, and one of the more unique things you have is like this wall garden sort of technology, which seems to be fairly popular. Has that still got interest at this time?
You know, it absolutely does, but what has actually picked up interest tremendously in light of recent events is our ClearLoop solution. Because with ClearLoop, what happens here is that you're not moving your assets on the blockchain to sit at the exchange, you're delegating it. So it never leaves secure custody. We send an API call, the exchange puts the virtual digital asset into your account for you to trade with, and again, it never leaves secure custody. So like I said, in light of recent events, really has picked up some interest.
Right. I mean, that's kind of interesting from that perspective, Joel. I mean, because you guys are pretty much never leaves the vault period, right? In the sort of technology kind of perspective.
Yeah, so I'm happy to say I'm the only person not regulated on this panel, because I don't want to deal with all of that. I dealt with it before at Bitfire when I was a regulated exchange, and it was a pain in the ass. But yeah, so our basic premise is, to support people to hold their assets, whether it's a custodian or whether it's a bank or whether it's a corporation or even large organizations. We talk to museums that want to do NFT collections. So any digital asset that you want to protect, we're there to provide the technology to allow them to do that. I mean, the basic point, I think, is there has to be higher standards within the industry, right? The technology by itself can't do everything, right? There's been a lot of failures in the industry, and a lot of the failures have been people, right? It's just people not doing stuff they're not supposed to do. I mean, theft has always been illegal, regardless of the regulations. So, we provide, the technology where you can have that governance and you can have the security of the assets and protecting the assets. But I think one thing that's probably a little bit different than, what Betty and Nate are, we talk to a lot of corporations, companies that really don't have anything to do really with crypto finance, right? They're just trying to build their business, and the digital assets are something that's completely different. They're thinking about protecting their brand and protecting their customers and their relationships. They really don't care what the price of Bitcoin is at all because it doesn't matter to them.
Great, thanks for that. And perhaps maybe just thinking about it, Nate, you've been at JP Morgan, you've been with Bank of America, and then how you're kind of seeing it now internally to really build this initiative within a regulated bank, right? How do you get their management over the line to think, hey, look, we really have to focus on this as an industry? What are the sort of typical steps as one of the first joiners to sort of push cross-river to get them comfortable with this new business line, right? Because you might not be earning a heck of a load of revenue in the beginning, but we kind of all know, and that's why we're here, this is the future and this is where the activity is. I mean, what does that take?
Yeah, I mean, to be totally honest, it takes a management team that is willing to invest in the future, right? And we've seen it over and over again. The internet and every other technology that's come out, like the businesses that are willing to be early, willing to invest, willing to be patient, willing to bear through bear markets, no pun intended, are the ones that come out on top. And so I was a second joiner on the crypto team at Cross River, and because I spoke with the CEO, I spoke with the management team, and they were like, we're committed to this. We've been banking crypto companies for a very long time, and we want to build crypto infrastructure. We believe that every single user out there will interact with crypto in one way or another, whether they know it or not. And in order for that to work, we need infrastructure companies to provide white label infrastructure so the next unicorns that are Web3 can be built on top of a bank, can be built in a regulated infrastructure. We know regulation in the US has been a little bit slow to take shape, but with that said, we're still building. And I personally have conversations with regulators on a weekly basis. I mean, we are understanding.
You have my sympathies for that.
Yeah. Sorry, I'm not supposed to talk about that, am I? But the point I'm trying to make is that we together as an industry, need to work with regulators, need to work with our, Web2 executives, and bring them up to speed and show them. I mean, these are all conversations that we're having at the Thanksgiving table as well, right? Like, it's all the same.
So a lot of education. And then, I guess when people think bank, right, and especially maybe for some of the crypto natives in the room, what kind of like would separate you guys from the signatures or the Silvergates there? And, what's the edge that you guys particularly have over that?
So we want to be the biggest bank that no one knows. And what I mean by that is we are behind the scenes. So every service that we provide is white label. People use our rails to process payments. Every wire and ACH that goes that you're sending to Coinbase, if anyone's a customer of Coinbase, is being processed by Cross River. And so we do that for many companies like Affirm, Stripe, Revolut, Checkout, et cetera. And so we believe that we can do the same in crypto, right? And the friction lies in fiat and crypto and the conversion of that. And having Fed rails, having the ability to convert fiat to crypto and crypto to fiat, we're betting on that.
Great. And then we've got 5 minutes left, just a bit of a time check. And then Betty, one thing that you, I love the saying, is we were talking about is this current FTX, sorry, I was the first one to say it. We were having a bet. He was going to say FTX first. I lost.
We made 20 minutes without it. And,
exactly. But you made a good comment. Never waste a good crisis.
Yes, well, again, as we were talking about previously, is that, it's a terrible situation because the collateral damage are the users. It's one thing, I was a former trader for 11 years. It's one thing when you make a bad trade, the onus is on your shoulders, it sucks, you lost money, but you did it yourself. It's another thing when that money is taken from you, right? And so that's a terrible, terrible situation. But the upside, if you will, though, is that, as I think we all attest, is that the traditional people are still taking this as the opportunity to come into the space. It is shaking out these bad actors. It is making people, nothing's a problem until it's a problem, right? So it's making people ask that next question. Like, if it does sound too good to be true, then it probably is,
So, Joel, sitting there, Ledger, custody for all or not custody for all? Which side of the fence are you from, right? Everyone buy Nano, that's the kind of message we're getting, or is the message a little bit more nuanced to that?
Of course it's nuanced, right? I don't want to get hit by the other panelists. No, there are people that don't want to hold their keys, right? And there are people that it's illegal for them to hold their keys, right? So it needs to be the right solution for the right job. And that you go back to the education and all of that stuff. We have customers that come to us and they're saying, yeah, I want to do this, this, and this. And we're like, no, that's not really the way you should do it. And by the way, it might be illegal, so go talk to a lawyer first. But we're constantly having these conversations where we're educating people on it. And we're saying, you need to ask tougher questions. You need to really get in and dig into these things. Like, if you're approving a $1 billion transaction on your iPhone, probably a dumb idea. That's probably a dumb idea. If you're trying to, use like our Ledger Nanos for your, institutional operations, probably not the right idea.
That's where we all started, right? In 2016, right?
Okay.
When we went writing our
didn't
keys
have a
down
choice.
on a piece of paper, right?
Yeah, you didn't have a choice before, but now you have a choice. And now there's technologies that are put in place. So I think it totally makes sense for the right solution for the right person and what they're trying to do out of it. For corporations, they want to do a lot of self-custody because they're building businesses on top of it, right? They've got their whole operations and everything around it. If you're doing trading, yeah, probably don't want to keep your assets on an exchange. You probably want to, have a custodian in there. You probably want a bank that understands what the hell you're doing.
There's something else that we need to consider is that this is a very short-term kind of point of view. When we're going out 5-10 years, and when your airline points, your credit card points are on a blockchain, those assets you don't want to self-custody. You want them to be fungible. You want to be able to send them to pay for something. You want to be able to trade them. And so having a custodian that can, with a simple API call, transfer those assets, transfer those points that are secured on a blockchain makes a lot of sense, right?
No, absolutely agree. That's pretty much what we are looking to do, what we're founded on, what we're looking to move forward with. Absolutely.
Right. So I guess a copper, right? Are you guys like focused on using MPC, HSMs? You know, what's really the angle? Because we've got Mr. Sort of hardcore sort of kit out there. We've got Mr. License on the left here. Where's copper at?
They
right?
should be
We are
using
MPC.
HSMs.
We are MPC. We use multi-party computation cryptography, absolutely. And the way that we're not the only ones in the space that use it, but the way that we use it is that it's been designed thoughtfully to eliminate single points of failure. So, you know, to Joel's point, like our clients are institutions, you know, and it's looking so that they can also represent to their shareholders, to whomever, that, okay, I myself cannot just sign assets out. Like, I've got to work in tandem with these other shards in order to be able to do so. And if one shard is even brute force hacked, which would take 10 years of the entire world's computing power, they only have that one shard, so they can't do anything with it.
I can also tell you from someone who's interviewed every single crypto custodian in the universe, including Copper, including Ledger. I've done deep diligence. The answer is it depends. And the second layer to that answer is probably a combination of technologies and custodians and methods to custody assets is the ideal solution.
Well, I think also too, it's that, you know, if anybody worked in traditional and you went through 2008, no one's going to have one custodian anymore. You cannot have that kind of risk. Everybody needs to spread that risk across. So to your point, you should have just one custodian. If you are an institutional player, you're going to need multiple.
Got it. Right, we're just sort of very much on brief on time, but if you just had to closing statements, Nate, Betty, Joel, what would you like the audience to know as we sort of depart this lovely stage?
We want to support the next 100 builders, next 1,000 builders that are trying to build unicorns and want to build on fintech, want to build on Web 2, Web 2.5, Web 3. You want to rely and work with a partner like CrossRiver, reach out to me. Thank you.
And I would just say from the copper perspective, like being a custodian, we are looking to be as regulated as possible to provide our clients with the safest and most secure way to do their business, and also provide, you know, again, the prime brokerage services that one expects from a traditional space in the crypto space.
Joel, don't say buy nanos, right? Hashtag not investment advice.
Oh man, you stole my line and everything. No, I mean, my quick message is very simple. We need to do better as an industry. It's just unacceptable, the kind of crap that's happened in the last couple of months. We need to have higher standards for security. We need to have higher standards for transparency. We need to have segregation of accounts. I mean, stuff that's obvious, right? This stuff should not be happening, and we need to have a higher standard in the industry. There are companies out there that have solved these problems, so reach out to those companies, Ledger being one of them, and we're happy to help.
Agreed.
All right, ladies and gentlemen, and our esteemed panelists, I just want to thank you so much for your time, your thoughts, and for being here, and also those in the room for giving your time to be able to listen to these cerebral actions for our experienced panelists. Please put your hands together for our panelists, and we welcome on the next group.
Thank you, Kevin.
Thanks, Kevin.